All right, good evening, guys. Thank you for your patience once again. It's Ken at Tortoise Capital. This is the nightly strategy podcast for October 30th, 2020. Happy Halloween the night before. Let's get started. So we are still, despite the selling this week, we are still in bullish normal conditions, although we are dramatically oversold now on the 3 and the 10 and the 30-day NDX and seeing additional weakness in the longer term. For the first time in a while, that longer term has come out of overbought conditions. ADX is getting stronger for the bears at 19. ATR percentage has increased to 1.83%. And the risk Z, as you can see, is still favoring the downside now. And I just want you to notice how important and useful that risk Z was in preparing us for the kinds of sharp volatility to the downside that we've just seen. The holdings going into November, that should read November. These are the new holdings that will take effect on Monday, with the next reevaluation being due on December. Okay, so ETF 13 will be holding tech, emerging markets, and the Russell. ETF 22 is holding, or will be holding, consumer discretionary, basic materials, and industrials, which had a very good month. And ETF 32 holds clean energy, consumer discretionary, and materials. Okay, ETF 2 remains at 100% exposure. On the monthly, you can see that we rejected the Z3 from last month, and it has come all the way back to the top of the dragon. It is poised to test even further. I would not let it get any lower than this because of a concern I have of going all the way back to 300 and then a little further, even testing the Bollinger Band mean and the PSAR flip. But this was a clear rejection of the final stages of gains from this nice long win streak that we've had. So it's really time to be playing defense until the election is over. And the election isn't over until it's confirmed that we're going to have a peaceful transfer. On the weekly basis, you can see that amazing move in 2 stages. Here's that second stage up. Now we had the second week in a row of strong selling. Violated the PSAR this week. Has basically come back within spitting distance of the Bollinger Band mean. So it's got to hold support above 320. Otherwise, that next move down could be all the way to Z1. On the daily charts, today made a new 10-day low, got past the previous Z2, came down and tested the current Z2. The support at the previous belly of the RL10 held, and really that's the last thing holding it north of the 30-day low. But on Monday, that could test here and break. And if that breaks, look out below. I expect to see a test of that on Monday because of the painful last 3 days, which includes this nice harsh gap down and go. Not long ago, we were enjoying the fruits of that nice rebound. And we said in here that the downside was possible and it could go that fast. And that's exactly what happened. So can't be surprised when obvious moves happen. All you can do is be prepared for the moves. ETF 13, note the Qs just went below their 4-month moving average, although they still remain the strongest in the ETF 13 portfolio. Emerging markets did a little bit better by comparison this week. Latin America really got smoked. Treasuries were down this week, but even that, a minus 1.2% is looking pretty amazing. Japan, closest thing to solid defense among the equity indexes, but it didn't matter where you were this week. If you were exposed at all, you felt the pain. ETF 22, you can see that materials held up fairly well, but again, anywhere you were this week, you were exposed. So if you have to be exposed to the market, sometimes there's not much you can do. The choice to be in or out of the market, though, is yours to make, and there are opportunities to stand aside. ETF 32, the poor got poorer over there in the middle, getting smoked. Gold and income, that short-term treasuries among the defensive plays did fairly well. China actually resisted the sell-off better than the U.S. this week. But again, even among the ETF 32, not much safety to be had anywhere. So hybrid trading, which follows price, follows performance, had opportunities this week on the downside, which were considerable. And we have been emphasizing the intraday trade really for a whole month. Caterpillar stands out among the Dow and Travelers as pretty remarkable 1 month performances. But again, not much to choose from anywhere in the Dow. And you'll notice that the underperformers in general were pretty bad this week as well. But nothing in the Dow covered itself with glory. Among the sector spiders, again, even the worst performers lost at least 1% this week, and even the previous high flyers were harsh this week. So this was not just panic selling. This was discretionary capital preservation, even among the strong sectors. So everybody's putting on their armor for the election results. I can't remember it ever being, the process itself being this contentious. Under the ETF Max, the first time you see anything valuable, well, shoot, there it is. There's GAZ earned. You know, the thing that nobody wants, natural gas, is the thing that's actually starting to quietly get things done. A response to potential Biden victory, I think. That if oil and fracking suddenly becomes not as attractive, that natural gas as a domestic source looks better. In the world market model up next, everything in the U.S. above average except for the Dow still. South Korea, one of the few bright spots. Silver didn't have a great week, but compared to the other alternate asset classes is still, the best of the worst. Very few things on our radar list in the green and green, but home builders, silver, semis, and South Korea among the best there. And you can see the white and green section. These are ones that were formerly, white and green was great, now just good. This is where you want to be preserving profits and watching for resumption. So these are opportunities in here, in this sector, in this segment, I should say, to be ready for opportunities next week among the former leaders to rebound. So that's your techs, consumer discretionary, and growth. We're going to shift directly to the daily. We haven't seen this for a while, but an amazing number of signals for the channeling and for the overreaction, all basically showing the market condition being was a strong bull, has had a significant pullback, which creates buy on dip opportunities. And you'll recall the last two times the risk Z got to this level, there followed a pretty nice swing opportunity to the upside. And so this is possible. On the other hand, this is one of those, the last time it got to this level, it also did one of these. So we have a perfectly positioned critical state with the election coming and the increase in volatility to really favor the tactical trade on Monday. I think it's just going to be amazing, the intraday moves. You can see the 10-day min pains are the candidates that have lost the least. And so if we have a strong move up on Monday, it would not be surprising if these led the way. 10-day max pain are the ones that have sold off the most since their 10-day high. And you see some big tech names that are suffering, as well as some energy postured as well. So good candidates. Dow 30 tactical, only Amgen was a doji today. Everything else was decisively directional, and more of them are on channeling and overreaction than not. So it tells you it's that kind of market. Got a couple nice 5DDs in Johnson & Johnson and Merck, which are better than 3-to-1 and 4-to-1 on the auto framer. So we want to pay attention to that. We saw Apple's at 2-to-1 and also had big breakdowns on the 10-day and the 1 month NDX. So all of these that are in the red on the NDX are ones that had exceptional selling days and could be a precursor of more weakness. Lots to choose from. There's some 551Ws that are attractive as well. Caterpillar especially gets my attention. Honeywell gets my attention as a great company in a good location. Morgan in the financials, and then United Health and healthcare. So some clear targets are available. Among the ETF 30, it's almost the same story with a ton of channeling and overreactions. Just about everything better than 2-to-1 on the auto framer, and again a handful of good 551Ws. You have Mexico, XLB, materials, financials, and metals and mining. So every one of those is in a position to look good on Monday based on the fact that they closed higher than they opened today, and most things couldn't say that today. So those are 4 opportunities that are worth pursuing. The auto framer has just about everything we look at on the list, including some that are better than 8-to-1 with Intel and Cisco. Microsoft looks attractive to me at 3.8-to-1. Technology itself at 3.7-to-1. Brazil at 3.5-to-1. So again, this is a target-rich environment for the structured trader. Given the magnitude of today's move, it's no surprise that only 2 symbols test out better than 2-to-1 on the daily squeeze. That's Amgen and silver. Silver, I think, is especially interesting right now as the defensive play. 4 seasons being dominated by the winter and the fall, so everything falling, everything suffering, and so therefore the things that are not in that condition are really get your attention. So the defensive plays of silver and gold, and then the opportunity play in energy from the ETFs, and then McDonald's, Travelers, and Goldman among the Dow. lots to choose from. Big breakdowns in the multi-time frame NDX with some really excellent names that everybody wants to own at some point. So we can be judicious about entering on the long side. I still think we have to get through this week before you start taking the long side swings, in my view. But Apple stands out. Nike, Home Depot, and McDonald's are especially interesting to me. And then again, I think the techs, XLK and the Qs, are giving an opportunity to get long once the smoke clears. But again, for Monday, this is a short-term tactical market direction kind of a trade. You take your commands from the lead sled dog on this one, and that's clearly the market itself, and respecting the direction it wants to go. And again, I'm expecting a great big move on Monday. Notice that the last time on the percent stretch that it came to this location, it gave a nice strong move to the upside. So we'll actually the last two times it did that. So we'll be prepared for that upside move. That could be a 5% move to the upside out of this pullback. And as bad as it feels, the long-term slope stat is just back to the long-term average right now. So in that sense, it's really just a normal market and a normal pullback until proven otherwise. It's just that you're going to get to buy some of your favorite symbols on a 10% sale. You have to think that way in order to be resilient. Okay. The Z-score and slope stats, everything has rolled over and returned to the yellow river and is coming back to long-term normal conditions. This is simply a logical recovery move after the two tests of the high. It came back to this level, The last time it was at this level, it responded with a nice upward move. So that is certainly within the bounds of possibility here. But again, if this thing breaks at 320, then a move to 300 is in order. And if that doesn't hold, then 280 is in target. And then all the way back to 250. And then it's like history repeating itself. So this really is a crucial, critical state. The least surprising move of all, coming back to this depressing state. If that's not a perfect metaphor for the nation's posture right now, I just don't know a better one. The Z-scores over different holding periods, all of the pullback on the 40-day, which it's down 1.2% over the last 40 days. That's a 0.6 sigma move. The pullback over the last 20 days has been 6%, and that represents a 1.7 sigma. Over the last 10 days, it's lost 5%. That's a minus 1.8. Notice this. Over the last 5 days, the loss of 5.6% is a almost 3 sigma adverse move. So this is a sharp pullback. It's been very painful. It's been exceptional, and yet it's right at a support level that you would expect to hold if you were an optimist. So there's very clear opportunities for people to express their optimism in buying. So we'll be available for that on Monday. So I just think this is a perfect hybrid traders tactical moment on the day before voting. So we'll be ready for that. All right, that's everything I want to cover for tonight. We'll get this published and posted, and I'm going to have the regular Q&A session in the morning at 10 for the hybrid trading group. No session tomorrow night for Halloween, and then Sunday night at 8 we'll be going over the the prep charts that you guys have posted on Sunday. This should be an interesting batch given the many tactical opportunities that are out there. So let's take advantage of the moment to work on our trade craft. Okay. All right. That's everything I got for you guys. Again, thanks for your patience. Thanks for hanging in there. Have a good, safe weekend, and be resilient. Be resilient. I'm preparing my psychology workshop updates that features resilience, goal setting, motivation, and creativity, and that'll be available pretty soon for the Platinum members. Okay, so thanks again for the support. Take good care. We'll see you in the chat room.